So in the past month, Canopy Growth stock has bounced back from their 52-week low by about 40%, which is a pretty big rally. But before you get too excited, they're actually still down by over 60% from their 52-week high after crashing very badly this past year. And again, this is actually including the most recent rally. So what the heck is going on with Canopy Growth stock? This is a question that I get asked a lot by my viewers. So in today's video, we're going to talk about why Canopy stock crashed by so much, why it bounced back a little recently, and whether or not I think that they will recover in the future, and if I plan to buy any Canopy stock myself anytime soon. Should be a fun one. I hope you guys enjoy this. Let's go ahead and get started. What's up everyone, my name is Ale. Welcome back to my world of stocks. Alright, before we go any further, I should just quickly mention that I have never invested in any MJ stocks, and by the way, I'll be using code words like MJ or CAN or even ALK, which I'm assuming you guys will know what I'm referring to, but I have to kind of do that because YouTube is really strict with the type of words that you can and cannot say in your videos. But like I was saying, I've never been invested in any MJ stocks because I always felt like the valuations were just a bit too high, no pun intended. But if I was forced to invest in one, I would probably choose Aurora myself, and I've explained why in previous videos, so I won't regurgitate that same information here, but the gist of it is that I just feel like they're becoming one of the largest and most diversified companies globally, which is something that I think will be important for MJ players in the future. But that does definitely have some drawbacks with it, like share dilution, which is something that Aurora has been heavily criticized for in the past. But again, I'm not invested in any MJ stocks, so I should be able to give an objective and honest viewpoint on Canopy in today's video. And so we'll discuss some of the pros and cons that I feel are associated with Canopy. But let's go ahead and start by taking a look at that stock, and then we'll get into why they've been crashing and rallying and everything else. Okay, now over the past 5 years, the stock is actually up by over 1,000%, and even in the past 3 years alone, it's still up by almost 175% as well. So it's not exactly all bad news, but for anyone that bought the stock closer to those highs of around $50 a share, you've had to stomach a horrendous crash of over 60% from those highs to where the stock is trading at now at just around $20 a share. And that's even after the recent rally that they saw over the past month, where the stock bounced off the bottom by about 40%. Regardless, knowing how Canopy is arguably the most popular MJ stock out there, it's probably safe to say that a lot of investors are down huge on the stock, and I do absolutely feel for them. But why did the stock crash by so much in the first place? Well, first of all, the stock clearly climbed to unsustainable levels when MJ was first legalized in Canada in 2018, and Canopy caught most of the headlines all over the media thanks to their very popular Tweed brand of products, which was made even more famous thanks to a partnership with Snoop Dogg, along with the fact that Constellation Brands, the company behind popular beers like Corona and Modelo, invested billions of dollars in Canopy for close to a 40% stake in the company, in what seemed to be a match made in heaven, as they would likely be able to create MJ-infused beverages in the future. And all the meanwhile, Canopy was seeing explosive growth in their sales that kept a lot of growth-hungry investors flooding into the stock. In fact, sales climbed by over 200% in fiscal 2017, close to 100% in 2018, and close to 200% again in fiscal 2019, which is obviously very impressive. But the problem is that this led to an absolutely ridiculous valuation. Keep in mind that, like most other popular MJ stocks out there, Canopy is not profitable. So we have to look at their sales to really value the stock. And when looking at their price to sales ratio, at the start of the year, it had climbed to nearly 100. Today, it's dropped all the way down to about 27 after the stock crashed, but a PS ratio of 27 is still ridiculously high. I understand the reasoning of bulls, which is that they've seen such high growth in the past that this valuation will likely come down in the future, but generally a good value is considered to be a PS ratio of around 1 or less, so it could potentially take many years until this valuation even starts to make any kind of sense, and that's if sales continue growing at astronomical rates, but we'll talk more about that a little later in the video when we cover their future potential. Now granted, this is a trailing PS ratio that we're looking at, but Seeking Alpha still gives them a full forward PS ratio that is close to 300% higher than the sector median at over 23 versus only 6. To be fair, I would imagine that their forward PS ratio should be a bit lower than that given the high sales growth, but it might also be due to the fact that their outstanding share counts continues to grow at unsustainable levels. In each of the past 2 years, their outstanding shares have grown by about 50%, and then they grew by another 56% just in the last quarter alone. That's a big deal because it ultimately dilutes shareholders and hurts their valuation, as a PS ratio is calculated using the revenue per share, which obviously the revenue per share gets lowered every time that you increase the number of outstanding shares. So clearly this was an overvalued stock, and when you get to those type of levels of trading for around 100 times your sales, you're going to need everything to go perfect, or else your stock is going to get crushed, and that's basically what happened with Canopy. See, not only Canopy, but most of the entire industry as well has been seeing many challenges this past year, and that's led to a lot of investors losing faith in the company and running for the hills, while short sellers have flooded into many of these stocks to take advantage. But with that said, let's go ahead and take a look now at what the challenges are that Canopy has been facing, and then we'll transition over to what I think the future looks like for them right after. Well, the first thing to keep in mind is that Canopy is obviously a Canadian company, and in that market, the government agency responsible for public health rules and regulations, known as Health Canada, has been criticized heavily for not issuing licenses fast enough to MJ growers and sellers, which led to an oversupply in the market as they couldn't sell through their products fast enough. In fact, at the start of 2019, Health Canada had over 800 license applications in their backlog that they needed to approve. Even provinces have been incredibly slow to approve physical dispensaries. For context, even months after legalization, Ontario only had around 25 legal dispensaries, despite Ontario being home to nearly 40% of the entire population. These issues have led to oversupply at a time when MJ prices were still much cheaper on the black market. This report from Bloomberg notes that MJ prices in Canada are 45% cheaper on the black market than in the legal one, which is where companies like Canopy operate. And this one from Forbes estimates that the black market will account for over 70% of all MJ sales in Canada. That's a pretty big deal. On top of that, legalization in Canada didn't initially include much higher margin products like edibles, vapes, or even beverages until Can 2.0 got passed, which is barely going into really like full effect next week. Can 2.0 is like the legalization of those different derivatives, but we'll talk a little bit more about that in just a second. And anyways, that combined with how much cash these MJ companies need to burn through in order to keep growing at their high rates has ultimately led to them steering further and further away from profitability, which is something that investors got tired of seeing. If we look at Canopy's free cash flow over the past 4 fiscal years, and I believe this is in Canadian dollars, by the way, we can see that they've lost hundreds of millions of dollars in 2018, over $1.2 billion in 2019, and over $1.5 billion in just the past 12 months alone. These aren't little increases either. In 2017, those losses climbed by almost 150% and then accelerated to over 350% in both 2018 and 2019. That's not exactly a good sign. Even Constellation Brands was forced to feel the pain along with them, as they lost close to $500 million just in the last quarter alone because of Canopy's struggling business. And they've actually been pretty vocal about their disappointment in the company's performance as well. And while we're on the subject of Constellation Brands, I might as well add now that even Can 2.0 isn't going to solve all the problems for Constellation's investment, as beverages will not be allowed to contain alc or even caffeine for that matter, which is obviously very bad news for Constellation Brands. Although I am assuming that this will change in the future, but I'm still not exactly sure how long we'd have to wait for that. And we'll talk we'll talk more about Can 2.0 in just a second, but keep in mind that Canopy, in partnership with Constellation Brands, is not the only company that is going to be targeting this market. You can't forget that Hexo is partnered with Coors and Tilray is partnered with Anheuser-Busch, both of which are set to launch new MJ drinks very soon, while even Kronos has partnered with Altria and MediPharm Labs to likely enter the vaping market as well. Luckily, Canopy does have one of the better looking balance sheets among its peers, years, which will help them stay alive against the growing competition. But if they keep burning through cash at the rate that they're currently doing so, things are going to turn ugly real fast for them. Keep in mind that they're not even expecting to be profitable until 3 to 5 years from now on a GAAP net income basis. So any investors holding on, waiting for a large surge in profit growth, will likely need to wait for years upon years to see their bullish thesis finally play out. Okay, clearly I've just painted some very negative looking pictures for both Canopy and the entire industry as a whole, but the truth is that I'm actually not entirely bearish on MJ stocks, especially the big players like Aurora and Canopy. While I did just point out a lot of issues for Canopy, it's not like it's all just been bad news. After all, the stock did just rally by about 40% in the past month, so clearly there is some optimism floating around somewhere, and that's what I want to touch on next. So let's take a look now at why Canopy has been seeing a little bit of a rally recently and what they're doing to turn things around in the future, and then I'll finish up with my overall conclusion at the end. Okay, well, let's just get one of the most obvious reasons out of the way for the recent rally, and that's that the stock had clearly been destroyed by a gigantic amount, and anytime that happens to a stock, it's not exactly difficult to bounce back a little off the bottom. After all, the stock had crashed by close to 75% from their 52-week high down to their 52-week low, and while the company is technically burning through cash at an enormous rate, we can't forget that this is still a very high revenue growth company that does in fact have future potential if they can fix a few issues. In fact, even despite all the headwinds, their revenue is still expected to climb by over 80% in each of the next 2 years. Granted, that's quite a bit lower than last year, but lower expectations could set them up nicely to surprise more to the upside if things go better than expected. And there's certainly a lot of opportunities for exactly that to happen given all of the growth catalysts available to them. For starters, the legal market is still growing very rapidly with plenty of demand, even with the black market still making up the majority of the sales. According to Statista, global spending on legal MJ products is expected to more than double by 2024 at over $63 billion, while Canopy estimates that the total addressable market will be closer to $250 billion. They're likely being way too optimistic with that figure, and I didn't see a target year for that either, but just to give you some context, Canopy only did less than $200 million in total revenue last year, so there should definitely be some big opportunities out there for them. Personally, I think the market will benefit players with more global exposure like Aurora, which is why I continue to think that they're likely one of the better options as a long-term kind of pure play MJ stock if I was forced to choose. But the good news for Canopy is that they have at least made some decent progress internationally as well, especially in the European medical markets with their Spectrum brand. And their pending acquisition of acreage should set them up nicely to enter many different states across America as well. Not to mention that they should also be entering the US CBD market very soon, which we'll likely hear a lot more about in the coming quarters. These could both be very big deals for Canopy given that the US legal MJ market is expected to grow by over 30% this year, despite recreational use not even being legal at the federal level yet, while the CBD market, which is mostly legal now when derived from hemp, is expected to grow by 700% this year. Still, Canopy's performance over the short to medium term will likely still be at least mostly reliant on the Canadian market, which could lead to problems that we discussed earlier in the video. However, it's also possible that CAN 2.0 may help them improve their margins by selling more profitable derivatives. This is another reason why the stock has been climbing recently, as they officially unveiled a number of new products, including a chocolate line developed in partnership with Hummingbird Chocolate, new vapes including a lineup of pens with cartridges and batteries, and of course MJ infused beverages including 3 different flavors for their very popular Tweed brand. All in all, the various different products should be coming to market by sometime in January, so there's not too much longer to wait. Still, there's just really too many issues that we looked at earlier for me to feel confident enough to actually invest in Canopy long term as more of like a core position in my portfolio, with the biggest of those issues, at least for me personally, being the very high valuation. I just can't bring myself to invest in a stock like this that trades so high while the company is still seemingly several years away from profitability. And so for that reason, I still consider Canopy to be 100% speculative. Don't get me wrong, I think gambling on some spec stocks on occasion is okay for the most part, as long as you're limiting your exposure to it and you fully acknowledge and realize the risks that you're taking. In fact, I sometimes allocate around 5 to 10% of my portfolio to spec stocks, but lately most of that funding had actually gone to Tesla, which I was considering to still be a bit speculative, but I no longer really feel that way. I feel like Tesla as a company is making a lot of progress towards becoming sustainably profitable, and I just really believe in them long term. So I don't really see Tesla as speculative anymore. So I guess that does open up some funding in my portfolio. But before I'm really willing to invest in Canopy or even make kind of a speculative play on them, I would like to see them at least make some kind of progress towards becoming profitable. And I would also like to get more clarity on the overall market before I'm willing to invest in that space. So I think I'll be staying on the sidelines for now, but I may reevaluate in the future. And again, I still think that Canopy has a lot of potential, but it's kind of it's difficult to say whether I think they will go up or down in kind of the short to medium term. I think longer term they'll probably be okay and probably be one of the bigger players, and I think some of their partnerships, like the one with Constellation Brands, will ultimately benefit them as well. But anyway, these are just kind of some of my random thoughts. What do you guys think? I'd love to hear your thoughts down below. And let me ask you guys a fun question. If you had to choose between Canopy or Aurora, which one would you go with? For me personally, I think I would probably go with Aurora, but I'd love to hear your thoughts as well. Or is there a third option that you guys prefer even more than both of those? I'd love to hear your thoughts on that as well. Anyway, thanks again for watching. It really means a lot to me, and if you enjoyed the video, please consider hitting the like button. Really helps support the channel. But I'll catch you guys in the next one. Take care. Bye-bye.